What's up, guys? All right, so a few things to talk about here. SMCI reported very poor earnings. Super microcomputer is down almost 24% today. This falling caused Nvidia to fall, which caused the IWM, which caused the tech stocks to also fall. So in today's video, we're going to take a look at everything. We're going to put it all together, and we're going to take a look at what the next steps are in the market. All right, so we're going to take a look at the S&P 500, the NASDAQ, the Russell, the dollar, and the bonds. All right, so without further ado, let's get started with the video. All right, so number one, SMCI. SMCI accounted, first of all, this stock is up from almost $94 back in April to over $350 in August. So within 3 months, the stock underlying price jumped up hundreds of percent, okay? So this is obviously crazy. What ended up happening was SMCI accounted for 5% of the IWM's total holdings. And clearly, you know, it didn't do too well. So that's another reason why the IWM didn't do well. SMCI caused Nvidia also to fall because Nvidia as a play basically within sectors, within stocks, within the same sector, if one drops, there's a word for it. It's not, it's crossing my mind, but sympathy. As a sympathy play, Nvidia also dropped, right? So right now, this is the first time that Nvidia is trading outside of the lower level of the Bollinger Band in quite some time. All right. What ended up happening because Nvidia is down like this, the NASDAQ is also down, closed below this trend line for the first time since March, and also was trading outside of the lower level of the Bollinger Band. This move to the downside is primarily caused by the sell-off in not only Nvidia, but also SMCI, and in relation, obviously, the IWM. So generally, usually when tech stocks and like if we're continuing on in an uptrend, with the tech stocks falling, the IWM related stocks would start getting some love. But as you can see, because there was such a big drop in all of the stocks in general, but in Nvidia and SMCI, because SMCI held a big portion of the IWM didn't get any love. So it caused everything to drop, which also obviously caused the S&P 500 to drop. And the reason why the SPY did not drop as dramatically as the NASDAQ and the IWM is because crude oil and crude oil stocks are doing really well. Not to mention, tomorrow morning, we have CPI data coming out. So I hope no one is swinging anything too dramatic overnight. It's not safe at all. And that was a lot. That's a lot of information to just take in. But overall, you know, to give like a quick recap, we were long Apple overnight with some 182.50 calls. Those were up almost 40% overnight at the open. So we sold those at the open. And then it ended up dropping dramatically again. Then the market overall, the SPY fell down to 446. 444 intraday, and then it bounced back up, and then it sold off again. So Apple is trading outside of the lower bands, but there's still more room to go. So remember, Apple was one of the main reasons why I was sort of bullish overall, right? But I didn't go long anything else except Apple, because Apple was very overextended to the downside. What this just happened, this move where we opened inside the Bollinger Band, this basically reset everything. So we can have another huge couple of down days now, because the reason why I was extremely bullish and long Apple, not only intraday but also overnight, was because we had multiple days where we were opening and closing outside of the Bollinger Band. What ended up happening was the fact that we opened within the Bollinger Band today reset it. So tomorrow we can gap down or we can, you know, open anywhere. To be honest, we can open anywhere. The Bollinger Band is going to be much, much lower tomorrow morning, and we're most likely going to open within the Bollinger Band once more, which gives even more room to go to the downside before this becomes, once again, before it becomes extremely overextended to the downside. So there's a lot more room to go to the downside. But the main level of support right now is 176.63 on Apple. Apple has been a clear victor, clear strength out of Apple, but so far, you know, since earnings, we're down almost over 10%, and yeah, you know, but the thing is that it's not the time to really try to go long until we get a bit of a retest closer to 176. But things can start to really drop dramatically. But it's not really a time to start going short. So we've been, you know, there's a lot to look at intraday. But intraday, the most important things to look at. So for example, intraday in the morning at 9:30 to 10 a.m., etc., right? Tesla was a huge reason why. So we were holding at levels of resistance or holding at levels of support. As soon as Tesla made a huge move intraday, that caused the SPY to move up or caused it to move down. So watching these large stocks is extremely important during the day while you're trading. You have to be watching Tesla. You have to be watching the dollar intraday. If the dollar starts to show some strength, right? We've been watching every day. If the dollar shows strength, the market is going to fall. So if intraday, right, you're watching the dollar starting to hold support, bull flag, making highs, right? It's makes more sense to start leaning short. So if the SPY is also moving up alongside the dollar, that's a bit worrisome for SPY bulls. What you should end up doing is going short at levels of resistance on the SPY instead as the dollar is rising. Okay, so once again, right now, let's just look at this on face value. We see the dollar making a bit of a doji. It's not really doing much here. Okay, it's still failing to break above levels of resistance, not really doing much in terms of you know, retesting levels of support. It's holding. Okay, so if the dollar breaks above these candles here and the highs of these candles from last week, then that is going to be very, very bearish for the market. But right now, it's not really telling us much. Okay, so there's that for the dollar. The bonds are also important to look at because bullishness, extreme bullishness above major levels of resistance on the bonds or holding above levels of support on the bonds permeates and translates into the market. So as this is showing strength, we need to see if it starts to break back above these major levels of resistance, and that is the only time where the bonds are really going to show strength, and the strength in the bonds are going to show in the market. So it needs to break above these levels of resistance, needs to break above these levels of resistance. As it does that, then it can start showing strength in the overall market. But right now, this is starting to still just look like a, you know, the longer it takes to break above these levels of resistance, the worse it is for bulls. But, you know, just, it's not really showing much. The most important thing that we can do is use the bonds at levels of extremes. So we saw that the bonds were extremely overextended to the downside last week. When we were extremely overextended to the downside last week, especially back in early July, those were good opportunities to be a bit more bullish on the market. As they are starting to just consolidate at levels of resistance, once again, guys, it doesn't give as good of a it's not as sensitive. Okay, so the dollar is much more sensitive in terms of price movement on the overall market. So this is one of those times where the dollar, it can be green and the market is going to be red. For example, right now, the bonds, right? We could be extremely strong and green, but that doesn't necessarily mean that the market is going to be green. Okay, The dollar is different in this regard. Okay, so the dollar is much more inverse and it's much more sensitive in terms of the negative inverse relationship to the market. Okay, so the bonds showing some strength, not really doing too much, and the MACD really, it's starting to move up, but it needs to break above these levels of resistance. Okay, so that's that for the bonds. Let's just go ahead and take a look at the SPY, the NASDAQ, and the IWM, because right now we're going to get a much better understanding of what's going on with the market once we get CPI data tomorrow. All right, so right now what we're going to be looking at is purely just speculation. We looked at the dollar, we understood why the market fell, and we understand that the NASDAQ and Nvidia and AI stocks, SMCI, IWM are showing weakness. Okay, so we have to look at what the next steps are. But tomorrow morning, once CPI data comes out, we're going to get much more clarity. All right, so let's go ahead and take a look at the SPY. So the SPY, right? We were monitoring how we gapped up and showed this extreme strength in the SPY back in early July, right? Remember last month, we were looking, okay, how long would it take for us to get a retest of the lows of this breakout candle on the SPY, right? And it took us until today, basically, to get a retest back. And it's almost a month. So now, right, the SPY is making a bit of a falling wedge. We have CPI data coming out. It's extremely, we held this level of support. We came back, held a level of support absolutely perfectly. But, we can't really do anything overnight. Even in terms of futures, anything that you guys do holding into CPI, super risky. And on top of that, obviously this is a very bullish pattern. Usually it's bullish, but then if it starts to break below, it's tough. Honestly, it's tough because as we break lower, then it just becomes really, really interesting to try to go short, because going short into extreme weakness already is just a setup to destroy shorts. So intraday, as we made these lows back down to 445 and we continued to break lower and lower and lower, people started loading up at the bottom. So obviously when people saw that weakness, they FOMO'd in. People's stomachs started to hurt. They were regretful that they didn't go short. And I'm assuming that is going to end up happening to people if we end up falling down to 442 to 440 area. People are going to regret not going short. They're going to go short at those levels, and it's going to be perfect cannon fodder to bring the move back up to these levels, to the 445, at least 444, 445 level. And yeah, it's going to be really, really interesting. I'm very, very excited to see what ends up happening on the SPY in the next few days. For the NASDAQ, we can clearly see that we closed below this trend line. We broke below 370. We obviously retested, filled this gap today as well on July 11th. And we're closed outside of the lower level of the Bollinger Band. So if tomorrow we end up opening inside, we're not overextended anymore. We could easily just gap up, sell off even harder for two more days at least. And yeah, it's pretty interesting. Pretty interesting indeed. So basically, up here as we were skyrocketing, you should not have been going long, right? You should have been leaning short this entire time. And yeah, you can't really just buying longer term puts. That's really the game. That was all you could have done. And now we just have to see how the rest of the large tech stocks respond. Obviously, Microsoft is back down to June levels, almost back down. Like, if we can just look at how disgusting this looks on Microsoft. We are nowhere, like, we can fall very, very dramatically on Microsoft, and algorithmically, according to the Bollinger Bands, we still won't be overextended to the downside. So that is not good. Google, Same concept. Google is nowhere near it, and it's showing way more strength. Obviously, we looked at Apple already. Apple has a lot more room to go to the downside as well. It gapped up here, closed outside of the bands. If it opens within the bands again, there's a lot more room to go. Nvidia is the only hope. So what I'm going to be watching tomorrow is most likely what I really want to do is if the overall market takes a dive, I want to start playing Nvidia to the long side. Because Nvidia dropping like this only really happened because SMCI dropped. So what my plan is going to end up being is if the market really, really falls, we get a huge, terrible reading and the market is tumbling, right? I want to buy into Nvidia calls, out the money, probably 450s for 2 months out. And those should be really, really good in my opinion. With a 10-15% stop loss, that's what I'm hoping for. I'm hoping the market drops because you can see that the Bollinger Bands on Nvidia are not dramatically falling the same way that Microsoft is. And we are still trading within the Bollinger Bands. Or if we open low, we are not going to be trading within the Bollinger Bands. All right. And this is like the first time that we're trading outside of the lower bands in quite some time on Nvidia. So I'm hoping that the market ends up falling lower. And I'm hoping we get a lot more downside on Apple and Nvidia. Those are the stocks that I'm going to want to buy and go long on. And now we can quickly take a look at the IWM. We're still holding support here. It's very close to the lower bands, and the bands are flat, which is amazing. So if we get a huge move to the downside, we're going to be opening outside of the lower bands. We could look at the futures right now. If we end up gapping lower, and if the market ends up opening, look at this. If the market ends up opening on the IWM, 0.7%, we're going to be opening outside of the lower bands. If it opens 1% down on the IWM, oh my god, like you're not supposed to be leaning short. In the short term, yeah, the momentum intraday can continue falling lower, but this is prime time to start scaling into longer term calls, 100%. Intraday, you can continue falling lower, whatever. We can end up falling down to 1.5%. But this is beautiful opportunity to get into longer term calls, in my opinion. So that's that. The next thing I want to take a look at is seasonality. All right, so this is the seasonality chart for the technology sector. All right. So August, obviously on the S&P, we remember August was a flat month. Okay. But heading into September, the beginning of September, we get a bit of a pullback. Into the end of September, we get a big pop. So this is why Nvidia, Apple, these stocks, over the next few weeks, it's important to play alongside seasonality. Obviously, we have a big move in the middle to the third week. There's still a lot more room to fall within the first week of September, right? First half of September, right? But the biggest losers of the tech stocks that were previously winners, I really want to be long, and we're most likely going to be playing for August and November calls because we want to capture that move of September. Okay, so I hope that makes sense. That's basically what I really want to do. We can see that the technology sector for basically the past 20 years hasn't been green. And when you look at the SPX seasonality, you could also see similarities. So for the SPX, August is flat, right? But then September is red. But look, we end up getting a bit of a pop into the beginning, into the end, really, the second, third weeks of September. And that is really what I'm waiting for. And then it shows a big drop towards the end of the month. So obviously we don't want to trade based off of that, but this is what the numbers show over the past 20 years on average. This is what ends up happening. for the price movement of the S&P 500. All right, so we can't ignore that. And that's another reason why, you know, I really want to start definitely leaning long tech stocks and start just basically just leaning long tech stocks at the end of August, and especially after we get a pullback in the first or second weeks of September for a big pop upwards. And it's nice to see that these tech stocks are taking a bit of a hit right now, because that sets it up for a big move to the upside afterward. So again, what I really want to see is a big move to the downside on Nvidia, the overall market. We're going to be playing Nvidia, Apple, and everything to the upside. If the IWM opens over 1% red, then it's a good time to get into some longer term calls on the IWM. With a tight stop, obviously a 10-15% stop loss. Those are the trades I'm looking at. And also, if the NASDAQ opens outside of the Bollinger Bands, we could take a look at that real quick as well. It's not going to be as easy because it's still not, you know, flat, right? But this is the chart of the futures, right? So if the NASDAQ ends up opening 1%, right, it's still going to be trading outside of the Bollinger Bands. But I want to see the NASDAQ really, really take a hit, because even if we open up lower because of bad CPI data, then I want to see the NASDAQ take a tumble. If the NASDAQ can take a tumble, then we can definitely lean long Nvidia, Apple, and Tesla probably as well. Tesla would probably be a good long as well, because at that point it would start to try to fill this gap here at June 8th, right? So if it can fill this gap, then we can play a nice little pop to the upside on Tesla, play a nice little pop on tech in general. So that's what I'm basically looking at. So I hope this makes sense. Interesting. It's gonna be very, very interesting heading into tomorrow. Thank you guys. Love you guys. I will see you guys bright and early tomorrow morning. Today we had a pretty good day. Tomorrow we're gonna have a good day. The day afterward, of course, we're gonna have a good day. All right, so love you guys. Take care. Please make sure to comment, subscribe, do all that good stuff. And thank you guys so much for all of your support. Thank you guys for all of your comments, everything, guys. Sometimes I'm not able to respond to everyone. I read every single comment. I really, 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 really appreciate all of your love and support, man. And yeah, one step at a time, things are gonna continue doing amazingly, and we're gonna kill it. All right, so those are my thoughts, and yeah, that's it. I'll see you guys tomorrow. Thank you. Take care.